Welcome to another episode of A Quest for Twice. Today is September 28th. I'm going to do a deep dive about Teledyne. Teledyne TDY is a global sensing technology company. In the picture on the right, we can see an X-ray picture of a skull and teeth, as well as satellite imagery, as well as an underwater vehicle. So Teledyne provides the sensing technologies, including the sensors and the analyzers for those type of applications. It has 4 segments: digital imaging, instrumentation, aerospace and defense electronics, as well as engineered systems. So let's take a look at its user markets depicted in the figure on the top right. So commercial imaging in last year was about 40% of its total revenue. And U.S. government was about 25%. So adding together, that's 70%. 14% of revenue came from analytical and electronic test and measurements. Then the rest of the revenue streams came from offshore energy, other marine applications, and other commercial aerospace applications and industrial applications. Looking at the segment revenues, as I mentioned a moment ago, Teledyne has 4 segments. The figure on the bottom right shows the revenue per segment as a percentage of the total revenue. And the outer ring was for last year, 2021, and the inner ring was for 2019, before the pandemic. So we can see that the digital imaging segment became 57% of the total revenue compared to 31% from 2019. So back then, instrumentation was 35% and larger than digital imaging. Now, the digital imaging becomes much larger. As a result, pushed the instrumentation segment revenue to 23% of its total revenue in 2021. The reason behind the relative weight change in the segment revenues was because of Teledyne acquired FLIR in 2021, in the May of last year. And that acquisition revenue almost entirely went to the digital imaging. As a result, the other segment revenues stayed relatively stable, but the digital imaging grew significantly with the acquisition. Now let's look at the historical revenue trend and the gross margin trend. As I just mentioned, the FLIR acquisition was in 2021. So in the figure on the bottom left, we can see Teledyne's revenue was growing steadily between 2016 and 2020. Its gross margin back then was between 38 and 39%. Then the revenue jumped up to about $4.5 billion in last year, and this year the projected revenue is about $5.5 billion. Also, interestingly, the gross margin also grew in the last year and forecasted to grow in this year. So in this year, I expect the gross margin will be between 42 and 43%. The gross margin story will become more clear if we look at the quarterly sales and the margin that's on the bottom right. So we can see that the FLIR acquisition happened in the second quarter of last year. Afterwards, in the 4 quarters following, the quarterly revenue was fairly steady around the $1.3 billion. And the gross margin jumped up to between 42 and 43% in the 2 quarters in 2022. I believe that's a steady state gross margin picture because in the 3rd quarter and the 4th quarter last year, the gross margin was artificially depressed because of impacts from digesting the acquisition of FLIR. Going forward, I expect the gross margin will stay between 42 and 43%, while the revenue should stabilize around $1.3 billion per quarter. Now, let's look under the hood to review the segment trends related to revenue and margin. On the left, the figure shows the segment revenue in the last 3 years. If we remove the impact from FLIR on the digital imaging revenue, we can conclude that its segment revenue was very stable. With the exception of aerospace and defense, we see a dip in the segment revenue in 2020 and a slight recovery in 2021. That's because of the impact from the pandemic and the recession, especially related to the airlines in the aviation industry, which was impacted significantly by the pandemic and is still in the process of recovery. If we look at the adjusted operation margins that's shown at the bottom right, then the margins were not that stable compared to the stability of segment revenue. So look at the bars on the far right on the non-GAAP operation margin. We can see that the adjusted margins were high post FLIR acquisitions. So was the higher adjusted operation margin caused by the FLIR acquisition? Actually, if we look at the segment operation margins, we can actually see that it was aero defense and the instrumentations delivered very high operation margins in this year and last year. The digital imaging segment margin in this year recovered from the low last year. Last year, the digital imaging operation margin and compression could be blamed for the acquisition and related digestion related issues. But in this year, the 15% operation margin was still lower than what was achieved in 2020 and 2019. According to the management, that's because of the foreign currency exchange impact, disproportionately impacting digital imaging. So hopefully, the long-term operation margin for digital imaging will recover back to the 2019 level at least. Now, I'm going to review its mode and capital efficiency. So I believe Teledyne likely has a narrow moat from its scale and intellectual property. So the return on invested capital before FLIR acquisition was about 10 to 11% before tax. That's an indication of a narrow moat. Recently, it dipped to about 6% because of the goodwill acquisition from FLIR. So was FLIR acquisition a good use of shareholders' money? The FLIR acquisition cost about $8.1 billion, including $3.7 billion of cash, assumption of $500 million of FLIR debt, and $3.9 billion of stock issuing to FLIR stockholders. If we compare the EBITDA from 2019 to forecasted EBITDA in 2022, the EBITDA will increase by about $0.7 billion. So we can use the acquisition cost of 8.1 billion over 0.7 billion. We will get 11.7. So that indicates a good bang for the buck. And despite the Teledyne issuance of new debt to finance the acquisition, in the most recent quarter, the net debt over EBITDA was about 2.5. That's fairly manageable. So I would say Teledyne has a decent track record of capital efficiency. I also note that Teledyne has no dividend or share buyback history. Its free cash flow is mostly used for acquisitions. Therefore, it is vitally important for the management to purchase new companies wisely at a good valuation level in order to preserve the long-term shareholders' value. Finally, I'm going to review the company valuation and the risks. So its enterprise value is about $20.3 billion at $350 per share. And the EV over 2022 EBITDA is about 15.7. I believe that's fairly valued. The forward PE is about 23, and that's not cheap either. So what are the risks to the company business? One thing to note is 25% of revenue from US government. That can be both an opportunity and a threat. As an opportunity, the government spending is different from the general economy. So the reducing correlation may help to smooth out the business cycle impact from the general economy. On the other hand, it's hard for me to understand the value drivers of the government and how that impact the future business of Teledyne. A strength of the company is it's a steady business, and the margin is not impacted by inflation. So we can see that in the most two recent quarters, its gross margin actually were historically high. That shows that the inflation had a minimum impact on its margin. The reason I was interested in this company to begin with was because of the changing climate will need more monitoring. For example, greenhouse gas emissions, especially methane. And also just to observe our environment, including the atmosphere and the ocean, will require more instrumentation and imaging tools. And the threat, as I alluded earlier, is management may overpay for acquisitions and destroy shareholder values. So at this point, given the valuation level, my conclusion is that I will monitor and only purchase a share of Teledyne if a discount is offered by the market. At the current price level, I will just keep monitoring and take no action. This concludes this latest episode of Quest for Twice. Until next time, happy investing.